Hello, Maverick traders. Welcome out to your currency midweek update for April 27th, 2022. It's nice to see all of you as well. Good to be here with you. As always, a quick reminder to make sure that you follow your trading plan. Everybody's a little different, so just make sure that you stick to your plan. If you need to tweak your plan, so be it. But you know that what you don't want to do is go rogue. You don't want to go against your plan. You don't want to go against solid risk management principles. That's very important. So let's dive into the markets here a little bit and kind of look at what's happening. We've had a lot of volatility in equities and some pretty good moves in FX. You know, I mentioned last week some ideas. I actually transitioned. I had highlighted pound Kiwi and got stopped out. And I went to pound Aussie because it gave the same setup. Well, pound Kiwi gave another setup, but pound Aussie gave the same. And that one's working out really well. Also, CAD continues to be really strong. The Japanese yen is bouncing. We kind of talked about that. That was probably at an exhausted point. It seems to kind of been that way. US dollar best of the bunch. So there's plenty happening in FX land as well. The markets are in, I would call it a resumption of the downtrend. So we had a little bit of a pause, and that's good. If you look at downtrends, you can only slide. Markets won't fall 20% in a short period of time in all likelihood. It's more like you go down 5, 6, 7, then you bounce 2 or 3, and then you go back down 5, 6, 7, and then you bounce 3 or 4, and then you go back down 5, 6, 7. That's more natural. Now, if you get violent down slides, it usually is best when it comes out of kind of a consolidation. So if I were making a little drawing of the market, it might look something like that. And what we recently had was a big downward slide out of the consolidation. So that was a very good thing in terms of we were well rested. And so that type of slide, context is very important in trading. If you were to just tell me, there's a huge red bearish candle today, I'd say, okay, that tells me only that there was more selling, but it doesn't build context. I need to know, okay, tell me a little bit about the story of what was happening prior. And if you said something like, well, it'd been selling off for the better part of the last 3 weeks, and now today, all the bad news, really came in and people got scared and they sold off, I'd say, boy, you should buy that. Or, not buy it like trade it to the upside, buy to cover. You should buy on that. You should be closing up your bearish trades. You should be locking in profits because that's more of an exhaustion type of dynamic happening. That's kind of what happened with the Japanese yen, the big, ugly, red, terrible days. Well, they happen at the tail end of a massive decline. That's when something's exhausted. So from there, you're probably going to do a lot of this junk and this back and forth. And how do you trade that? I don't know. It's very hard when you're a directional trader to trade a bunch of that, even if it goes a little lower and then it spikes back up. And that's where the yen is at. Did it go a little lower from its exhaustion? Yeah, a little bit, but then it came right back up and it's right back to where it was. So, if you timed it really well, you could have caught another little dive, but then you'd have had to take profits because now we've kind of rallied back up the past couple of weeks. But if you said to me, okay, context, huge red candlestick, but here's what was happening prior. We had all these little candles and we've been chopping sideways. And then this one came in big and vicious and okay, that looks like a breakout candle, and it probably does lead to further deterioration because it's the start of something. It's not the tail end of something. And so, when you think about how assets bottom and top, most people think, well, this thing won't go, something that's going down, that they'll think, well, it's not going to go up until there's good news. No, that's exactly opposite. It's going to start going up once there's terrible news. That's how it usually works, because that will be the final flush out. The really bad news that hits is going to cause anyone that's willing to sell to kind of come in there and sell and give up and throw in the towel and so on. And once you exhaust the sellers, well, there's no place left for it to go but to kind of bounce back and recover a little bit. Now, the recovery is not always great. Like I said, a lot of times it's just choppy sideways junk, but nevertheless, you want to be taking profits on those. So that brings us to the idea of the US dollar. We've been screaming higher in the dollar. You know, everything's set up really well for the dollar. You've got rates, hikes, expectations have gone through the roof. So, and I mentioned this last week, I was wrong about some aspects of this for sure. I did not anticipate the Fed to be, I thought the Fed was way behind. I thought they were going to have to raise rates more than the market expected. And I thought inflation was going to be worse than expected. That was the end of last year. But rate expectations were for, you know, a hike of maybe a couple of times by 25 basis points. Fast forward to now, or fast forward a few months later, and I remember saying a couple of months ago, oh, I'll take the under because usually markets overdo it. Well, I was spot on at the end of last year that the Fed was way behind, that they were going to have to hike rates more than markets expected. But I never should have kind of taken the under a month or two ago when I said, you know, the Fed's more accommodating. Look, they're going to hike rates and they're behind, and the inflation has been even worse than I expected. So, you know, my argument was they were underestimating, and then I thought, well, they're probably overestimating. Well, I got that wrong. They didn't overestimate. They're now adjusting to more rate hikes. Now, later this year, do I think that the Fed, do I think they've probably overdone it at this point? Now they're talking about 50 basis point hikes 3 times in a row, a total, you know, multi-month move. I don't know if the Fed can do that, but we'll see. I definitely shouldn't have taken the under a month or two ago because things have gotten worse. And by the way, the war breaking out, that added to the inflation. Wars are inflationary, and that just added to the problem, and that just, you know, kind of piled on. So I would say I got the analysis spot on at the end of last year that it was going to be a rough year and that the Fed was way behind, but I didn't realize how bad it was going to get on the inflation front. So definitely wrong on that side of things. Cryptocurrencies, they're just fluttering around. I don't think you can really do much with them other than look on the downside, which we talked about last week. They're just not a buy. With all this US dollar strength, it's really hit gold and oil for the first time. They've taken a hit. Oil dipped back below 100. Gold got hit hard. I mentioned this last week. I ended up closing up a bunch of my precious metal positions for now, and that was as of the first part of last week. We, again, kind of had an exhaustion type of signal, and I closed up some of that. I still have a little, but that's been good. And my inkling is to get back in, to rebuy, and I just don't see anything yet that says gold's going to go on that next run. So for now, the precious metal trade is off for me and just more neutralized. The Aussie CPI came in hotter than expected, 2.1% increase quarter over quarter versus the 1.7% expected. So inflation, again, for everyone around the world, is somewhat of an issue at this point. So as we look at, you know, the performance this week, the markets are bouncing back, and this down return is getting a little bit better since we pulled the charts and whatnot, but for the most part, everything's down. You can see negative everywhere. Gold and oil down, crypto, world markets, U.S. markets, all negative. So there's not, bonds have been having one of their worst years in history. It's it's interesting that stocks and FX haven't had the same turmoil that some of the other markets. You know, when bonds are down this dramatically, one of their worst in history, stock market's not down that much by comparison. We're not hitting the worst in history type of numbers. Now, it doesn't mean it can't get worse before it gets better, and I suspect it probably will. I've touched on that my long-term target for SPX coming into this year was 3,800. Now, from 4,800 where we started the year to 3,800, that's a solid 20% down. And I don't give a 3,800 target as if it's like, hey, you have to go and touch that exact number, but more to give kind of insight into, I think it's going to be a rough year for the market. So at the start of the year, well, it was really more at the end of last year that we started talking about, hey, when this calendar flips, it's going to be, there's a lot of things that are problematic for the markets. We're going from QE to QT. We're going from quantitative easing to quantitative tightening. If you think the Fed pumped liquidity into the system and that helped assets, well, then them tightening, the flip side of that is it probably hurts asset prices. And sure enough, we're seeing some of that. So, you know, do we still get to 3,800? Probably so, but I think this is the level where we should bounce. We're back to these lows. It looks to me, to my eye, like probable that we'll get kind of a bounce here, maybe an inverse cup and handle or something along those lines. So if you're looking at it from an S&P perspective, you know, this is around 4160. This is at about 4640. So if we just kind of measure the move of this, you say, well, the range, the size of that is about 480 points. That's the difference between those two numbers. Remember, in a cup and handle, this will be about 30% of the size of that. So 30% of 480 is about 144 points. So, you know, 144 added to 4160 is about 4,300. That's probably, we'll bounce another 100 points or so, and that's probably where you want to re-up on the short side. I don't love the short setup right here on support, but you bounce back up at about 4,300 and probably get bearish again. If you're thinking that this will have an influence on FX, well, it could, certainly a minor risk on move in the equity markets. Maybe you get a little bit of a reprieve, maybe the US dollar, the Japanese yen, some of those things that have been a little bit stronger here the last few days, back up a little bit if that correlation continues. No guarantee that, you know, a minor bounce in the market has to be seen in FX. The major moves, there's more correlation. Little minor moves, well, it may not perfectly correlate that way. So you can see Japanese yen actually surprisingly the strongest so far this week, but US dollar basically tied. Euro and pound, the worst performers. We highlighted pound on the downside last week. You'd have actually been best served, and I've traded CAD to the upside. I've said for the last couple of weeks, it's my favorite upside candidate, and that's been a good call. But I should have followed my own advice. I traded pound Kiwi because it gave me a setup and got stopped out. Traded pound Aussie, and that one worked out nicely. But focused on pound and euro shorts. You know, that's kind of what's made sense, and I think continues to make sense. As you look at crypto, pretty rough week. That failure to really establish a move upward a couple of weeks ago was the undoing there in crypto land. So there's not too much to kind of add in terms of color here. I mean, it's a bad market environment. Look, you're below the 20, you're below the 50. The 20 is now sloping down, and it's gonna come down here and slice below the 50. Again, I think we're stretched. We get a bounce, and then we get a rollover. So the bounce happening, you know, simultaneous to this crossover, we're just moving into a downward trend. You can see international markets and crypto markets have already had that bearish crossover. In many cases, we were in kind of a consolidative phase. Look at Bitcoin, look at these crypto, and kind of more sideways and breaking to the downside. So I don't know what's going to save crypto here. It needs something. It needs some sort of catalyst to get this moving. and I'm just not sure it has it. So international markets, I mean, it really very, very similar expectation to US markets. They're trading somewhat in lockstep. You're at the level you should bounce, but then ultimately, I suspect it's a sell the rally market for now. Bitcoin, Ethereum, cryptocurrencies, bearish. It's weaker than broader markets. Already had bearish rollovers. You can see a consolidation here and a big bearish candle that's just starting a breakdown. Not a great look for crypto. So I still suspect we get lower levels in that land. As we look at this week, so we've got advanced GDP. JP Morgan came out with expectations for this to be at 0. Most analysts are at 1%, but look at that drop off from 7% basically last quarter to close to 0% growth. We've got problems. We've got high inflation. We've got growth going back to 0. The employment picture is good, but there has been some recent news about layoffs, for some major corporations. Robinhood just announced massive amounts of layoffs. They're not the only one. So all of a sudden, you're starting to see an economic backdrop that's problematic. If you follow yield curves and inverted yield curves as a suggestion of that historically points to a recession, well, we got one of those signals. Now, that's not typically a quick signal, right? We're talking about recession that would happen in a year to a year and a half, but still, that seems to be the path we're headed down. And I just feel like we just got too frothy. We did some things that were stupid as human beings, right? And I don't mean to say that everything's bad, but look at like the NFT market, non-fungible tokens. Now, I'm sure there's some use cases for them and so on, but we did some stupid things as humans. Like, I think of NFTs, what a weird concept. Like Jack Dorsey, who's the founder of Twitter, right? And his first ever tweet that he sent out, well, they made it into an NFT. And what is an NFT? They took a picture of his tweet and they said, we'll sell it and somebody gets to own this picture. They're the owner of this picture of this tweet. And somebody paid millions of dollars for that. And this is happening on all sorts of things. Millions and millions of dollars going into what? I have no idea. Anybody can go take a picture of that tweet. This is frothiness that tends to happen. And it kind of speaks to, human beings, we're weird. I don't know how to explain it, right? Tulip bubble. I remember I've talked about tulip bubbles and the tulip mania from 1400s or whatever, and how these people would pay more for this flower than they would, it was worth more than their house. And people were going crazy for these flowers to pay for a tulip. And it was just this craze. And I remember thinking, well, we'll never be that dumb again, right? Hundreds of years later, certainly we'll never be that dumb. Like we'll never pay, more for a tulip flower than for our house. That doesn't make any sense. And now we're paying millions of dollars for, a picture of a tweet. I don't get it. But anyway, it speaks to kind of the frothiness, I think, that was in the markets, and we're seeing the negative side of that. That's what inflation is. There's just frankly too much money being paid and a devaluation of currency, and we've got to get back to some better equilibrium. The problem is it's going to be a bumpy ride getting there, because at 8.5% inflation, the Fed's target is 2. And yeah, I think inflation's going to back up, but even as it goes to 6 and 5, it's still way too high and 3 times more than the Fed's goals. So, it's a bit problematic, no doubt. So let's get in here to a little bit more analysis. If you have currency pairs or things that you would like to look at, fire away. I'll do a couple of updates because we focused on these a little bit more last time. This setup that was found in pound Aussie and pound Kiwi and so forth, Well, let me start here because we talked about pound Kiwi and just didn't work. I mean, there's no other way to put it. We kind of came up, hit the upper Bollinger Band. This is where it would have, could have, should have rolled over, and it started to, and then got stopped out. Well, ultimately it is working, but it was choppy, and so I got stopped out. But pound Aussie gave the same, and I basically went to that one, and that one's working out really well. Perfect. You know, it was a little cleaner. It just, the first time it touched, it turned bearish. That's what you really want to see, rather than hits there, kind of trades through it for a day or two. No, that's not ideal, but this one was a little cleaner setup, and you can see how it's falling off of those highs. So the setup playing out. If you look at some other currency pairs, pound against CAD has been even better. It didn't hit the upper band, but nevertheless just continues to trade to lower levels. So CAD, you know, it's been a preferred currency to the upside, and like I said, I should have been frankly just stuck with that, but I did branch out into some of those others. I've been playing CAD to the upside against Euro. I think that's still fantastic. You know, we've touched on that you know, it just continues to trade well. Now you start to get into a question of, well, you know, anytime a trend is starting to get stretched, okay, let's watch for some sign of that it's the tail end of this, right? That what is an exhaustion? Well, it's where everybody, in this case, it's a downtrend, so everybody throws in the towel, and it would look just like this. I mean, here's the point. That candle, the fact that it's the largest candle in the entire decline, and it happened at the very end. Look at how big this candle is, and it happened after you had fallen for about 8 sessions in a row. You know, that's what an exhaustion candle is. So if we get another one of those here, you know, big flurry finish, you got to wrap it up. You got to take your profits and move on to find something else, in my view. Euro USD we had a request for, and I think you can, this was the question that I posed at the start of class, which is, okay, is US dollar getting to a point where we're going to, you know, we're starting to see these exhaustions? So you're getting stretched, you know, you've fallen in most currencies versus the US dollar. You've fallen since that peak about 5 or 6 days ago, and you'll see it across all the charts. We'll click to a few. Biggest candle to start the move, that's great. That should lead to more downside. Now we're getting another big size candle at the tail end. This one to me doesn't quite look like it's finished, but it's starting to be. So what I really love is that flurry finish tomorrow. Like, you know, if Euro USD has a big, huge red candle, you want to, well, I want, let me speak for myself, I want to lock in profits on that type of scenario. Look at dollar CAD. It's not the best because CAD's been a little bit better, so it's more of a consolidative mode. But again, you'll kind of see this reversal kind of taking place. Let's think here. We could go against the Swiss franc. Okay, same thing, an extended chart, but you're starting to see like where this broke out from, it should have a big size candle, right? That's great, perfect. If we start to see that at the tail end of this, then, you know, see how it's just basically extended, and these are a little smaller, and now you're getting bigger. Again, it doesn't look to me like it's the final kind of big exhaustion candle, but maybe it's getting close to that. Within the next day or two, I wonder if the dollar is going to kind of have that big finish. Now, do you always get an exhaustion finish? No, you don't. I wish, you know, this was always the case, but my point is that that would be an obvious telltale sign. Maybe you take profits anyways because you've got other things telling you to do so. Okay, great. But if you do get a big exhaustion, you have to seriously consider locking in those profits and halting US dollar upside trades for now. That would be my That would be the way I do it. I don't trade all things at all times. I want to have what I feel like is opportunity. And if it's already broken out a long time ago and way stretched, and then you get an exhaustion finish, what more upside is there? Most of the time, sometimes it will keep going and you'll just be perplexed and you'll go, well, it'll keep going without me. Okay, great. But most of the time, and that's what we can play is, probabilities. Most of the time it'll go sideways after that big exhaustion, or big kind of wild sideways where it fakes like it's going to go up again, goes down, or it'll just kind of collapse back down in the short term. And none of those are a good thing for you if you're long. The only one that's good is if it can somehow do the unexpected, and rare where it just keeps going. And it's just not probable to do that. So, let's look at a few other things here. Let's bring over, let's go through some crypto. Let's go through a few different concepts here. Where's my charts? Crypto, I think, is a quick update. It's just, you're bearish. I mean, I don't know what else to say other than it just is a bearish setup. Here's one of my favorite setups we've touched on before. We talked about this in that midweek. When you come up under a broken 50 like that, you tend to fail and see another dive. So that trade worked out quite well. And we said Bitcoin, some of these others were hanging out a little bit better. So we were kind of picking on Bitcoin, and there was one other. Here we go. Litecoin had the same concept, broken 50 and rallied back up underneath. And those were the two. Cardano, you could have done the same, but those were the two that come to mind as being the candidates. And bearish is the direction. Let's look at our currency baskets. We know US dollar is strong. This is, again, a good way to kind of think about the exhaustion. Instead of thinking about it on a single pair, come into your baskets and say, okay, look for something that's more in that size. Not this. That's why I say I don't think that today's the day where it's like the flurry finish, but it's not far off. And you get another big candle up in the air like that, believe you me, that's where I would be locking in those gains and saying, okay, I'll look to reload. And the reload might come quickly. It doesn't mean it's the end all be all that the trade is done. This thing might run for weeks on end, but take that exhaustion, lock in the profits. It'll probably chop around, and in that chop you could pull back. If it looks like the entire thing is done, well, then that's a different story. Japanese yen. So I talked about it kind of being the big exhaustion back here. Now, we did go sideways for the next couple of weeks. We did dip one more time and now rallied. But this is the type of price action. If you've been trading yen to the downside, it's not the worst place to kind of, you could have traded it just fine, because I think what you'd have done is taken your profits on your bearish trade and the exhaustion. It rallied for the next few sessions. This is a daily chart. And then maybe you reload on the short side. That's kind of what we're talking about in USD. If you get the big flurry finish, then it pulls back for a few days, maybe you reload. But ultimately, I'm not surprised that it's just basically choppy. Fast forward from that exhaustion, and we're actually higher. We're higher in the yen versus everything else. So if you've been mega bear and expecting some collapse or something, you're probably disappointed ultimately over how it's traded for the last month. And that's kind of what exhaustions do. Swiss franc, choppy, bearish, more bearish than anything, but choppy. Euro, again, kind of choppy, more bearish than anything else. Pound, we've touched on this, more bearish, but a little choppy. Last week was tough. There wasn't, we said, look, it's a ugly, choppy market, but the things that are moving, CAD's got relative strength, US dollars got relative strength, pound looks like it's hitting the Bollinger Band criteria, and that's kind of all we had. So CAD is in a little bit of a breather. I would call this absolutely an exhaustion. Okay, so here is the breakout. There's a little bit of an exhaustion. We pulled back for the past couple of days. Probably a reload type of scenario. Again, I don't think that the entire trend is done, but if you take profits here and it pulls back for a couple of days, that's very good. That's the opportunities you're looking for. Aussie and Kiwi have traded poorly unless you compare them to something like pound, over the last couple of days. So Aussie back down here, trying to bounce today, and Kiwi, like we said, has already been in a little bit of a downward trend. So that was just a strategy specific Aussie and Kiwi against the pound, but I can't really advocate for them against anything else. They look bad. So where do I see opportunity? I mean, I would actually go, if we were labeling them, just on a pure technical relative strength basis, you have to say US dollar's been the strongest, no doubt about that. Okay. Second, I'm going to go CAD on that list. On the bear side, Aussie and Kiwi are right up there. I mean, you certainly have to put them up there on more of the bear list. I think you've got to add the pound on that list. Euro, Swiss franc, I mean, there's some choppiness in a lot of those currencies, but that would kind of be the way that I would break things down in terms of the charts. Now, I would rather be looking for take a quick profit on US dollar, especially with kind of the big finish. So CAD looks like more of something that has the next trade in it on the long side. On the short side, you could team up CAD against, really any of these as an opportunity, but it's not even, I don't trade a lot of CAD against Kiwi or Aussie. There is a little bit more correlation, but now is not the worst time to be considering some of those pairings. Okay. Let's take a look. So Kiwi Yen on the short side. And, you could look at the yen for upside trades. I mean, it makes sense based on kind of, if you feel like the market's going to continue to trade poorly, that's where the yen tends to do well historically. So, and a lot of bad news has been priced into the yen. It's had a rough year. So it's probably in that phase where it just has a little bit of pocket of strength here in the short term. So Kiwi Yen on the short side on the 4-hour. Yeah, I don't disagree. I mean, here's the setup, right? You've kind of broken support. You're coming up underneath it. Maybe we roll over here. I would say that it looks to me, I don't love kind of the way that it's behaving here. This is like, this one broke a little lower than the prior candle, but basically they're all just marked sideways. So there's definitely a level of indecision. What you'd really like to have seen is maybe this candle try to break through and have a wick here and then turn negative. I see something like that, then I get more excited because, again, it's big size. It's got energy behind it, and it reversed and it failed. And remember, from false moves come fast moves. So the fact that had kind of a false move up above and failed would really probably lead to an indication of a steeper decline. I'm worried you're going to get in a choppy mess. That would be my only concern, is that, I think it's going to trend lower, but it might be a little bumpy and choppy getting there. So definitely is susceptible to an early stop out. Let's look at CAD. Oh, sorry, that was pound yen. Well, that's not cooperating. Let's try it this way then. We'll go type it in manually. Pound yen. you know, same type of setup where it's basically a bear rally, right? So here's a breakdown out of a low base. You break down, now you're kind of rebounding back up underneath. Little failure here. I'd love to see some kind of, you know, failed move. Tries to rally, fails. Maybe the energy picks up, the candle gets a little larger. Again, I think there's just not energy in this right now. Right now, that's about as small a candle as you can possibly find. Now, it's not fully formed and whatnot, but that, again, I think that's kind of in that same boat of just a little choppy for now, but you might have a nice indication it's going to move in the shorter term. So good stuff. Yeah, I think you can continue to look more toward the CAD as being maybe another trading opportunity. So let's say, well, let's do it. Again, we don't do it a lot, but we could go, well, Swiss franc is a little choppy, but you can see how the Canadian dollar is kind of breaking higher. You could look at it versus the euro. A little bit cleaner chart here where it's broken down. Big size candlestick, you know, still think that you can continue to trade that to the downside. And pound CAD, I mean, that one's a little stretched. We looked at that on the daily and it's been running for a handful of days, but you might be able to squeeze out a little bit more before it kind of exhausts to the downside. So if you wanted to look at pound CAD, you're going to have a more sustained downward trend. And the only concern is, again, that maybe it kind of needs a correction, a consolidation, or something like that, because as you look at the daily chart, it has been going down for almost 10 days in a row for the most part. So may be getting a little late in that trade and in that trend. So good stuff. All right, well, we'll leave it there. Let me remind you, we do have a class tomorrow that we will be covering Q&A session. And other than that, keep with it. Keep doing, you know, good risk management, good position sizing. Those things are critical to long-term success. Hope you've enjoyed it. Have a great rest of your week, and we'll see you next time. Goodbye, everyone.